This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us this week is Precious Metals Fund Manager Dave Kranzler. Dave, it's great to have you back on the show.
Thanks for having me. It's always a pleasure. Love talking to you guys.
Been a bit nicer than last week this time. Gold and silver have moved up off of last week's lows. Silver here, we're recording on Thursday afternoon. Silver trading just about to 17.75 here today before trading down a little bit in the afternoon. In gold trading above 1230 at several points here this afternoon on Thursday. So it's a bit early to tell, but it's whether the final bottom is in, but it's very encouraging that gold did hold at 1180 again for the third time from my perspective. What's your take on the trading here in gold and silver, Dave?
Most of this move that we've seen, well, obviously for the better part of 3 years, but really since the middle of July, when gold and silver were about ready to take out some technical indicators to the upside, some key technical levels, I think most of the sell-off we've seen for the last 2.5 months has been, primarily a paper attack on the metals. The evidence of that is that most nights gold and silver will rally when the COMEX is closed and the LBMA is closed, and China and India and Asia, the physical gold buyers of the world are open and they're buying. You'll see gold drift higher up until about usually 3 a.m. East Coast time, and then once Shanghai shuts down and India is already closed, London opens and boom, they hit the metals. A chartist would say we did a triple bottom here in gold. If that triple bottom holds, I think it's going to be a very bullish turn of events for the sector. At the very least, they can't let gold stay below 1200 for a very long period of time, because if they do that, mines will shut down. We saw that in 2011 when they started taking gold a lot lower. A lot of the big mining companies shuttered mines because the price was below their cost of production. So I think at the very least, I think the 1200 level, high 1100s offers a pretty solid floor. So in my opinion, it's just a question of how long it's going to take for the technical damage to blow over and for this stuff to start back up.
What's your take here, Eric?
Well, that makes a lot of sense. I agree with the thesis. And in the trading that we've seen since last Friday, and we're recording this show Thursday morning, it looks like a very typical snapback style bounce, only the magnitude isn't, very strong to the upside. I mean, you were remarking earlier before we started recording about how, frequently we would see silver jump up $1, $2, whatnot in the past when it bounced off of previous lows, and when we were testing other bottoms, like in June 28th of 2013, or I think it was December 28th, turn of the year. We had seen more quicker bounces back, and I think that's part and parcel of the remaining leverage that's out there, and hedge fund managers responding to the equity markets. And it's interesting to watch how gold and silver equities have been following in lockstep with just the generic S&P 500 universe. Definitely have a lot of deleveraging going on, and that's impacting the downside that we see today with precious metal stocks. And the other day, silver didn't respond as strongly as gold. So the gold as safe haven / object of great accumulation out of China, etc., is what we're seeing first in terms of the bounce back. That's to some extent, I would say, to be expected. And all of this stuff, even though we're seeing a lot of volatility, looks healthy. And we held the triple bottom in gold, and I think gold is going to basically define where the market's going to go. And demand coming out of China in particular, but other places around the world too, for that matter, I don't think are accurately being represented in the financial press, even though there have been periods where you might have seen lower levels of demand relative to sky-high reactions after the April 13 through 17 or so bombing that we saw that weekend drive-by shooting last year. Demand overall is going to put a floor on this market. So, and cost of production for mine shuttering and all that kind of stuff factors in. So I agree with Dave's thesis.
And on the investment side, we have just seen an explosion of demand over the past couple of weeks. The U.S. Mint's Silver Eagle sales reported for the first week of October were 2.25 million ounces, which, to put that in perspective, over the first 10 months of the year, the first week sales have ranged from about 400,000 up to a high of about 1 million. So for a weekly period, it's almost 8 to 10 fold of the sales volume, and it's actually more sales in the first week of October than in the entire months of July and August. The Mint sold 2.007 million Eagles in August and 1.97 million Eagles in July. So the first 1 week of October here is more than all of the entire month of July and August. So sales have come back with a vengeance on the physical. Same thing for the Canadian Mint is again allocating maple sales. In generic rounds, availability has declined a little bit. There's delays starting to creep back into the market, and small rises in premiums. Haven't seen anything substantial yet, but just indicative signs that any extra sitting around available supplies were pretty much sucked up by the market instantly. And so that's an encouraging sign here on the demand side as well.
Anything interesting with the Sunshine Mint rounds and their overall availability? We talked about that a couple of weeks back, and he speculated that the introduction of the new coin might have some implication in terms of availability of blanks or the planchets for U.S. Mint. Anything new to update on that?
No, they're still running about 3.5 weeks out. So yeah, I don't really know whether it again, that was just speculation, whether it's related at all to the new round. Certainly they did have production delays last year when that wasn't a factor at all. So it could simply be that they're not able to meet production for their own 1 ounce rounds and make enough blanks for the U.S. Mint to make the Silver Eagles.
Well, prior to starting our recording today, we were talking with Dave about just how everything in terms of our economic statistics that are reported by our government seems to be pretty much baked and cooked. And then the level of corruption that is permeating throughout our system, it's just monumental. And Dave, I want to toss it over to you. Let's talk about that a bit, because I think that that's one of the primary reasons why people need to really be exposed to precious metals as a hedge asset, because the level of rule of law has deteriorated to a point in the United States of just, the country doesn't look like the country that I was born in. It's pretty shocking what's going on. And then when it relates to economics and how the average money manager out there looks at the world, I mean, the majority of these people don't really get it, and they're just kind of going along with momentum and having the Fed at their back, continuing to prop up the bond market, prop up the dollar, on and on. I wonder if you want to talk about this to some extent and dive into it.
Well, I mean, I think, and I think a lot of people in the country kind of get it now, just how corrupt and out of control our government is. But the question is, what do you do about it? And we're about ready to go through another election cycle here, where you're probably going to see, Democrats lose some of their power in Congress and lose control of Congress. And it's just going to be a wash, rinse, repeat of what we saw when Bush was in office in the 2006 midterms. If you recall, essentially the election then gave complete control of Congress to the Democrats, kind of as an offset to Bush's Republican power in the White House. And as it turned out, and I don't even know what legislation it was, there was only one bill that went through Congress that they voted down in the 2 years between 2000 and 6 in 2008. So to me, it doesn't really matter which party controls the White House or controls Congress. I think they're all beholden to the same corporate and banking interests. And and as a testament to that, as it turns out, I mean, everyone knows, and it's obvious, that Wall Street fraud and corruption has only escalated every year for the last 10 years. And the Obama government's indictment and prosecution of financial fraud is actually a lot lower than it was even during the Bush years. And, I don't know if a lot of people know that, but it's a fact. And so it just kind of tells you the extent to which Wall Street has kind of co-opted our government, and not just Wall Street. It's big corporations, big pharmaceuticals. One thing that I've found I've just observed, and I watch a lot of sports on TV, especially NFL and college football, and I would urge everyone who watches football this weekend to make a mental note of it, but most of the advertising is being done by the insurance companies. Now, why would that be unless the insurance companies are just minting money right now? And a lot of that is because of the legislation that's been passed over the last, 4 to 6 years has benefited the insurance companies.
Right. Yeah,
and it just kind of tells you how the wealth's being redistributed in our country, and Obama rode into office in '08 with all these promises to crack down on Wall Street, to crack down on partisanship in our government, and to crack down on fraud and corruption, and it's just gotten worse under his reign. So
to compare it to like the savings and loans crisis in the early 1990s, there were actually, a couple thousand CEO, C-suite type people, executives that actually went to jail. I mean, the number of people that have suffered some kind of serious consequence in relation to the financial fraud since, the last bubble buildup of the housing crisis, you can count them on two hands. I mean,
no one's gone to jail. Michael Milken went to jail. If Michael Milken was indicted and prosecuted for the stuff that he did during the 80s, if he was indicted and prosecuted, he wouldn't even be prosecuted now. He wouldn't even be indicted. The Justice Department would issue a statement that, we currently can't find anything under the laws as they're written to go after him with, which is what they've issued every time they've investigated Goldman Sachs. So, and Charles Keating went to jail. How come Angelo Mozillo didn't go to jail? Everyone knows Countrywide was one big fraud, and he walked away with hundreds of millions of dollars. And the Justice Department was going to go after him on a civil lawsuit, and it was determined that he's not fit to stand trial because his health won't permit it. So.
And tying this all back to our economic system and financial markets, when you have a degradation of the rule of law to the extent to which we've seen, it almost is like, the United States is being turned into a banana republic, and that's an analogy that you and Dr. Roberts have used before. And the level of fraud from the financialization of our economy is such that, at this point, a huge segment of the interests that are running our country are benefiting from basically paper pushing that's facilitated by the manipulation of the markets. And we have all, relatively speaking, historic low interest rates, a product of the Ponzi that's going on in the bond market and the derivatives market manufacturing synthetic demand for our bonds, and the QE, and that, is kind of a hot potato toss between the ECB and the Japan Central Bank in the United States. They take round robin turns as to when they're going to do stuff out in the open, and then they compare notes when it comes to relative currencies and switch emphasis based on that. We've seen that pattern go on where the United States will take a break and not be overt with their QE program, and then the dollar rises, and throughout this period we've seen that great pressure on precious metals as a result. Anyway, bottom line is that everything, when it comes to our economic statistics or when it comes to where our economic engines are moving from paper pushing and whatnot, there's a huge degree to which all of these, dynamics are just manufactured. They're fake. It's a hollow economy. I mean, there are real segments of real economic activity that are, reasonably healthy, like in the fracking industry, or, some areas of technology still have decent innovation in the U.S. economy. Obviously, everything isn't going to hell in a handbasket, but the overall big picture is such that it looks like this is a giant house of cards. I wonder how you'd respond to that.
Well, I'm not sure about the longevity of fracking, and there's issues related to that get covered up by the oil industry. And technology,
huge,
I mean, even at the peak of the original tech and internet bubble, technology only contributed 10% to the GDP. So, the underlying economy is completely rotted out, and it started in the mid '90s with the Clinton-Rubin strong dollar policy and the deindustrialization of America by moving all of our manufacturing offshore. So, and the biggest testament to that is the labor force participation rate. I mean, you're now, the labor force participation rate is now as low as it was in the late 70s, and that was really before women entered the workforce. So, the percentage of the working age population that is actually working as opposed to the total size of the working age population is probably even lower than it was in 1978. And that, to me, is a testament to just how rotten to the core our economic system is. And actually, James Turk posted a great graph of the price of gasoline in King World News a couple weeks ago, and it showed a graph of the price of gasoline, not the price, the number of gallons consumed by the country, and it went all the way back to 2000. And I'm doing this from memory, but I believe starting in 2006, a number of gallons consumed by the country turned down at close to a 45-degree angle. So in other words, even though the population has grown, there's more cars, etc., the number of gallons consumed every year has declined since 2006. Now, energy consumption has got to be one of the best indicators of economic health or non-health, right?
Right.
And you can't explain it away by saying, well, you've got these alternative fuel cars and electric cars, because it's such a small part of the total population of cars that, it might have a real marginal effect on those numbers, but not the degree to which gasoline consumption has declined over the last 8 years. I mean, you look at that graph and it's like, holy crap. And to me, that just reflects complete economic rot and the fact that the average middle-class person just doesn't have the kind of money that he used to have to spend on gasoline, and he's driving a lot less, and probably only driving, for the most part, out of necessity.
Not even just driving, but all of everything he's purchasing, overall purchases are probably down as well. Outside of inflation, just amount of goods sold, as everything is, well, not everything, but a large majority of products throughout our country are shipped via truck.
Yes, that's correct.
And the same trend can be seen with just crude oil as well, consumed in the United States, and that links up to a little bit even broader perspective, because oil's an input to feedstock for plastics and tons and tons of products, and just the same picture can be seen even when you link it up to the average standard of living for Americans. There was a study released a couple months back where they looked at the period between 2003 and 2013, and it was on the order of about, in terms of real net worth, the average American household saw a decline. I believe it was 38% in in that time frame using government statistics for inflation. So the decline is even bigger if you factor in a real depreciation of purchasing power. I mean, it's just phenomenal what's happened over the course of the busting of this bubble. The financialization that they're attempting to try to repair the bubble is only leading to more malinvestment, more economic hollowing out of the middle class, and financial assets that have appreciated to pick up where, everyone speaks about, well, where's the inflation? It's in the financial markets, and all that's going to lead to is some kind of a bust in the not-too-distant future.
Or anything else you guys want to discuss?
I guess maybe to sort of circle back on the degree of corruption, I think what's happened in the silver market and silver futures trading just is kind of the poster child for the government corruption, and I think every single person listening to the show probably understands that silver is highly manipulated, and it starts on the COMEX, and the amount of paper silver outstanding on the COMEX is several multiples greater than even the reported amount of silver being kept in COMEX vaults that's available to deliver under that paper. And the banks are the predominant entities that are short silver futures. And the reason why they get away with it is because they know that in any given delivery period, their primary counterparty, which are the hedge funds, will either roll their position into the next front month contract or just sell it outright. And I think it's something like, less than 2% of the outstanding amount of silver futures in any given delivery period is ever actually taken for delivery. And that's assuming that you trust the numbers that the banks are reporting in their vaults. There's no other commodities futures market that exists where the imbalance between the amount of futures outstanding and the underlying deliverable is so out of balance as it is in silver. And the manipulation is just obvious. And the CFTC has, quote unquote, investigated the allegations on 4 different occasions. And the last time around, I think the investigation lasted like 2 years or something like that. And they weren't investigating anything. They were just sitting there twiddling their thumbs, waiting until the appropriate moment to come out and announce that they couldn't find any grounds for supporting manipulation allegations. And of course not, because all they do is they go to the banks and they say, hey, what's the story here? How come you got so many futures outstanding? How come you're short all these futures? And the banks say, well, we're hedging. Well, what are you hedging? Oh, well, we've got client silver sitting in vaults, and we've got, we're synthetically long via derivatives. If we need to get silver, we can take delivery under our over-the-counter derivatives, blah, blah, blah. And that's about the extent of the investigation. And then the CFTC comes back and says, oh, no manipulation. And so, what I'd like to see is a true independent investigator come in and look at it and take trading tapes and take records from these banks. And I'm sure the CFTC doesn't do that. The last time they were investigating it, the head of the CFTC, Gary Gensler, he was an ex-Goldman Sachs partner. He's not going to go down and crack down on his buddies. It's just absurd.
I'm reminding of the great interview that Blythe Masters did with CNBC, where she was talking about just that, about, we are just helping clients hedge their positions and so forth, and quite
I remember that.
Tap dance that. So what's your take on the large silver open interest vis-a-vis the gold open interest on COMEX?
It's a puzzlement. To me, what I think it is I don't think it's some mythical Chinese entity waiting to stand delivery and blow up the COMEX. I think it's just simply the banks. It shows the effort that the banks have had to go to keep the price of silver down. And I think if the open interest, which normally the level of the open interest normally correlates with the direction of silver. So when silver is going up, the open interest goes up. When silver is going down, the open interest shrinks. And this time, with silver having gone from about $49 an ounce down to $17 an ounce, the open interest it declined initially, but somewhere with silver in the 30s, in the high 20s, all of a sudden the open interest started going higher again, and it's basically at near record levels. It's as high as it was when silver was at 49, and so it's the exact opposite of what we've observed over the last 14 years in terms of the relationship between the open interest and the relative price level of silver. So, in my mind, I think just to sort of keep it simple and not cloud the analysis with allegations that we have no way of proving, I think it just simply is a testament to how much effort the bullion banks have had to implement in terms of shorting paper to keep the price down, because we know that's how they're doing it. They're keeping the price down using LBMA forwards and COMEX futures, primarily futures. It starts in New York. So I simply think that's all it is.
Yeah, I tend to agree with that thesis. And Harvey Organ's speculation about China basically trying to lever in a position so they can use it as a weapon, it doesn't make a lot of sense, because COMEX can essentially cash settle at the flip of a hat, and there goes the weapon. It's not a usable weapon. So I wonder.
Exactly.
I mean, we've already seen China lever a position to use their political power. Back in 2008, they basically called up Paulson and said, "Hey, dude, you've sold us a bunch of mortgage-backed securities that are rotting to the core. You got to do something." And lo and behold, in July, or maybe it was August, I forget, but we nationalized Fannie and Freddie Mac, and
that was when that's right, and that's when the government was essentially swapping the Chinese out of their Fannie and Freddie agency paper and into treasuries.
Yeah, and that's a great example of sovereign nation of power making another sovereign nation do something, and the United States, more to the point, not having any options. That precipitated a huge change in the whole sentiment of the financial evolving crash that started in 2007 too, because that's when the commodity markets peaked. Everything just kind of turned on a dime. Oil was near 150, and we had the peaks in precious metals and so forth, and then everything went to pot as the deflation bandwagon started going like some demonic flywheel.
That's right. And, to circle back to the Harvey Organ theory on the Chinese and the COMEX, the biggest problem with that theory is that the way trading information disseminates in these markets, if China, even if they were doing it through third parties, if China was accumulating positions in COMEX silver, you would hear about it. The word would get out. The word would spread like wildfire. It's just the same thing with that theory that J.P. Morgan was the big buyer of Silver Eagles a year ago or 6 months ago or whenever it was. And the fact is, I spoke to several silver dealers, including Doc here, I believe. I think the last time I was on here, we talked about this. And you said, if J.P. Morgan was the buyer of
we'd hear about it.
Eagles, we'd hear about it from our distributors. There's only 4 mint distributors or something like that.
There's a couple more than that, but we talk to them daily, and we'd know about it if there's a new big buyer.
Yeah, and the distributors would know who it is.
And even if you couldn't do, naming of JPM just because they have some kind of proxy or whatever, the fact is that there hasn't been a single large buyer of Silver Eagles throughout this whole period. I mean, it's been a relatively diversified pool of buyers. So
poor man's gold, and in my opinion, it's especially the record jump we've had in Silver Eagles toward the end of September. I think that is just an indicator that the common guy out in this country is really it's starting to to get it more and more.
Yeah.
Yeah, it certainly is amazing when you look back at Silver Eagle sales from even 5 or 10 years ago versus today. Even earlier in the year when we were a bit off of last year's paces, the level of investment silver coin sales in a time where there's not irrational exuberance from a blow-off peak like we saw in 2011. It's at the end of 3.5 years of boring consolidation, and you're still seeing record investment silver sales in North America, and not to mention what the Asians are doing.
Do you know let's just say that the Silver Eagle sales, it's roughly, 40 million a year, say, just for
the last couple of years it has been roughly 40 million, that's right.
Do you happen to have the number of Gold Eagles off the top of your head?
I can look it up quickly. I mean, for silver, we're already at 34.5 million through the first week of October here.
And what's that number for gold?
I don't have that off the top of my head. I can take a look. I know gold has been down quite a bit for the year versus last year in 2013, where silver has been neck and neck with 2013 the entire year. So comparatively, the retail purchases of gold have been down quite a bit for Gold Eagles and U.S. Mint products versus there really hasn't been any drop-off at all for silver.
I mean, in my mind, that accentuates the fact that silver is poor man's gold, because as the price is going down, I mean, you've seen the gold-silver ratio, I think, is close to 70 now. And at the peak in 2011, I think it got down to the low 30s. So silver, on a relative basis, is twice as cheap as gold was, and you're seeing the sales of silver versus gold accelerate. And so to me, that right there is the poster child for the fact that silver is poor man's gold, and the fact that sales are starting to pick up like they are significantly in silver tells you that the average guy out there is saying, hey, something's wrong. To the extent that I have cash that I don't need to put food on the table and clothing on my kids' backs, I'm buying silver. I don't want to hold it in dollars.
And I took a quick look at the numbers on the U.S. Mint site. Year to date in Gold Eagles, there's been 404,000 ounces sold through the first week of October. Last year, in 2013, there were 856,500 ounces of Gold Eagles sold. So it's not even, here we are in the fourth quarter, and it's not even, haven't reached 50% of 2013's Gold Eagle sales.
That's incredible.
It speaks to the fact that the percentage of people in the United States that are investing in the precious metals remains really small. And those that are already in, to a large extent, have been hurt to some extent. And free cash flow is a consideration for a lot of the average Joes out there that are investing, because it's not as easy for them to do it. And I think that to some extent reflects the decline in gold, and as Dave said, poor man's gold being silver picking up the slack. People recognize that there's a lot of value to be had in silver, given where it is relative to cost of production and long-term outlook.
So give the feds money printing a few more years, and maybe copper will be the new poor man's gold.
Except copper is not technically a monetary metal.
Some societies have added as monetary metal, and it is part and parcel of the U.S. system, going back to our Constitution money.
Right. All right, so we'll keep an eye on the trading action here. Again, it's a bit too early to call a final bottom, but as Dave alluded to, a lot of market technicians would point to that 1180 level, which is now held 3 times as a triple bottom. And if, in retrospect, if that does prove to be the bottom, I'd expect a pretty decent move here off of those levels over the last 3 months of the year, especially as we start to get some momentum to the upside.
Yeah, and as we were talking about last week as well, too, the indications of demand picking up in India and China are pretty significant, and every time we get down to these levels, it puts pressure on the COMEX system, the LBMA, to continue this paper shenanigans because the physical demand just doesn't go away. And in the final analysis, there's always that thread of any given month where comics monkeys that are manipulating things have to deal with people bleeding out inventories. And that game does have an endpoint at some point.
Right. All right.
Keep the lid on the prices falling.
Well, Dave, once again, it was great to have you on the show. Thanks for joining us.
Thanks for having me. I appreciate it. Always enjoy being with you guys.
All right. It's our pleasure as well. It's always a great show when you're on. So for the Doc and Eric Dubin and Dave Kranzler, thanks for tuning in to this week's SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve chairmen in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.